In this video, we're going to be breaking down my extremely simple trend following strategy that you guys can literally copy and trade tomorrow using the same rules. The rules are extremely simple. I tested it across almost 200 trades and it resulted in, let me show you guys, around 56% for the win rate and an average risk reward of almost 1 to 1.5. And this is pre-optimization before I made any sort of refinements to improve the strategy. After the refinements, you start to see a 65% win rate with a 1 to 1.5 average risk to reward. So it goes a tiny bit higher, and so does the win rate. Okay? This is a very simple trend following moving average strategy. It doesn't incorporate any sort of complicated indicators, complicated maybe IC terminologies, any sort of stuff that you guys might not be aware of. Plain and simple, trends, market structure, pullback, and continuation. That's all you guys need to know. All right? Now, going into this, we have to first understand, since it's a trend following strategy, we need to know, how do we identify the trend? What rules do we need to have to identify the trend? Okay, that's why we have the 200 SMA intact right here, this light blue line that you might see on my chart. Actually, let's get rid of this image since we already went over that. This light blue line on my chart, that is our trend detection tool. The way we're going to identify what direction is the trend in, which is going to also tell us the direction we should be biased towards. Because if the trend is, for example, to the downside, that means we have a lot of strength to the downside. We're not going to look to go against the trend, right? One of my favorite quotes, the trend is your friend. So you want to play in the direction of that. Now, the 200 SMA is going to be applied across 3 different charts. The strategy I use it based on the 30-second time frame, 1-minute time frame, and the 5-minute time frame. Okay, 30-second is this one on my right. Top left is my 1-minute, and the bottom left is the 5-minute. Now, on all time frames, you're going to incorporate the 200 SMA, and you're only going to take your entries on the 30-second time frame. Now, you guys can also use this in conjunction with other time frames as well that maybe would be suited for you. For example, the higher time frame may be a daily time frame, maybe a 1-hour time frame for your entries. If you want to go for a swing trading system, you can 100% do so. I prefer to scalp getting in and out of positions very quickly, which is why I do it on the lower time frames. But you can 100% apply this since most of the work is going to be done on the main time frame, which is the 30-second time frame in my scenario. Now, going into this, the first thing you guys want to look for to identify your trend is going to be looking at where is price relative to the 200 SMA. Okay, if price is below the 200 SMA, first we're going to look at the 30-second, right? The lowest time frame going forward, the main time frame. Is price below the 200 SMA or is it above it? That's going to be the first thing to determine, are we going to be biased towards shorts or longs? In this case, in this current situation, it's going to be below it, right? Because we're under the 200 SMA. Now, you're also going to look at the 1-minute time frame to see, is it also below the 200 SMA at this current point? Now, if we go, let's make sure it lines up. Friday, May 30, Friday over here. We line up also under the, what's it called? 200 SMA over here as well. This light blue line is the 200 SMA on this chart, on every chart, and we're under the 200 SMA. Next thing we want to look for is, what is the actual trend of the price action? That's the second criteria we'll look for to get confirmation on our trending trade, on our trend following strategy, okay, to get a short bias. Because not only does the SMA have to slope down, we have to see the price action under the SMA, we also have to see market structure showing a downtrend or price action showing a downtrend. And when I say downtrend, you guys already know, I mean lower highs and lower lows. That's exactly what we want to see. And this is a perfect setup forming for our bearish bias, right? On the 5-minute, you also need to look at it as well and see a price holding below the 200 SMA, but 5-minute is going to be our last final confirmation. It gives us an extra boost in our trades to make sure we're taking in the highest, most probable market condition. Sometimes the 5-minute might not be aligning with us. It might not be below the 200 SMA, which is fine. That just lowers the quality just a tiny bit, but it's still enough. It's still profitable enough for me to want to take my trades with it. Okay. Main thing we want to focus on is the 30-second time frame and then 1-minute time frame, and the 5-minute to see kind of general bigger picture overview. So on the 30-second, price is below the 200 SMA. On the 1-minute, price is below the 200 SMA. On both timeframes, we're also forming a pretty strong downtrend. And we also, our final thing we want to see as well is we want to see the 200 SMA. This is the 200 simple moving average, by the way. I didn't think I explained SMA in the beginning, but simple moving average. And if you guys don't know how to apply that to their chart real quick, you're going to go to your indicators tab. You're going to type moving average simple. You're going to press on technicals right here. Click this, add it to your chart. And then once you pop that down, you're going to click on your moving average line and change the length to 200 on all your time frames. That's going to allow you to have the same MA line that I have, or SMA line that I have. Now back to what we're talking about. We want to see the 200 SMA on the 30-second time frame, or the main time frame, also slope in the direction that we want to play in. So for this situation, we want to have a bearish bias. We want to see the 200 SMA also slope down, along with price action forming a downtrend, right? Along with the price action holding below the 200 SMA, right? This whole area, we're holding below it. It's beautiful. So now that we have all three of those kind of criterias met, boom, perfect. We're biased towards shorts. Beautiful. Now we can look for actual entries now. The way we identify our entries is we wait for a pullback back into the between this green and red SMA, which you guys see on my chart. And then once we get a candle closing out of the green SMA like this, that's going to signal our entry. Okay. The green and red SMAs are based off of this indicator called the Williams alligator right here. These are the settings I have for the Williams alligator. This is the style I have. I have the jaw function turned off. I have the teeth and lips set on. And make sure you set the teeth length to 13 and lips length to 8. All three under these are usually the default values, I believe. So you'll be fine not leaving that. But make sure you have those settings applied and you'll have the same line set up exactly how I have it. All right. Now, what we look for entries, once you guys have this applied, you want to see a move in the direction of the trend, and then you want to see a pullback and price coming back in between this green and red SMA. Okay, you want to see price come in between these two, but not touch the red one. If we wick the red one, that makes the trade lower quality by a lot. And if we close past it, that completely invalidates the pullback. It tells us our pullback is too strong. We shouldn't look for any sort of continuation unless price decides to continue back down for another leg down and then get another pullback. So in this current situation, we got a pullback in between the green and red SMA after our strong trend, and then we got a move down closing out of the green SMA. That's the only time you look to enter. Once a candle closes back out of the green SMA without touching the red SMA. All right, and that's exactly what happened here. We enter here. Once we enter, we're going to make sure we put our stop losses at the furthest point of that pullback right before we got our entry. In this case, it's going to be above this black candle. And our take profit is going to be set at the swing low or a minimum of 1-to-1 risk to reward. Because sometimes when we place our TP at the swing low, we don't get a complete 1-to-1 RR minimum. And that's exactly what we want to see, a 1-to-1 RR minimum. So a lot of times you might even have an RR that races between 1-to-1 or all the way to 1-to-3. Just know you want to make sure you have a minimum of 1-to-1 RR. That is, there's no maximum. You can have a 1-to-5 RR in some situations, which can be rare and will show up, but you still want to keep it at a minimum of a 1-to-1 no matter what if you target the swing low. Okay. Next, once you guys can see this trade actually ended up being a loser, getting stopped out. But it was a completely valid trade. You guys already know the strategy has a 65% win rate, so we don't expect it to win every single time, but we do expect it to win more often than not. If we look over here on the 1 minute, we did actually tap into this. Okay, voice crack, Jesus Christ. We did actually tap into this in between the green and red SMAs, right? If we take a look, price is also underneath the 200 SMA at the current moment. The 200 SMA is sloping down. And on the 1 minute, we're also doing so as well. And on the 5 minute, we're also downtrending with the SMA, just barely sloping down right here. You guys can see my cursor aligns with on all the time frames, which is pretty sick to see. We ended up pulling down, retracing, valid retracement, just barely tapped in between the green and red SMA. Even if we wick or close into it, doesn't matter. We want to make sure we tap into between the green and red SMA. Okay. Once we do that, we got a closing candle out of the green SMA. Also, for the candle that closes out of the SMA, we want to see it be identical to the direction we want to play in. So if we want to play in the direction to the downside, we also want to see a bearish candle, not a green candle close, right? This candle tapped in there and closed out, right? But it's not a bearish candle. The next candle was a bearish candle. So any point after we tap into there, or on the same candle, sometimes you might see, once we tap in there, we want to see a bearish candle closing out, and that'll be our entry. and we're looking for an entry until price decides to close past this red SMA exactly how it did on this red green bar right here. So our entry would be on this specific candle. Our stop loss would go at the high of this candle, and our take profit would be set at the swing low. And this trade had a beautiful 1 to almost 6 RR trade, which actually does happen sometimes. It's not as often, but it is pretty common. You guys saw my average RR was 1 to 1.5 around pre-optimization, and after optimization, it's still around there. But most of the trades will sit between 1 to 1 and 1 to 3, and mostly actually 1 to 1 and 1 to 2, but you'll see some 1 to 3 RR trades as well. But most commonly will be around 1 to 1 and 1 to 2. Okay, but there are some of those outliers. Now, this is a very solid example of the trade. Let's see if we can find other examples as well. The beautiful thing about this strategy is that you have to also incorporate some sort of trend identification, so you make sure you're playing in direction of strength, because a lot of traders be complaining about price action and taking trades in bad price action, and the only reason that is because they don't have rules for the context behind their strategy. This strategy has the context rules, which is using the 200 SMA and the multi-time frame analysis, and using trend identification to make sure our price action is in a strong trend, our moving average line indicates us that we're in a strong trend, and the multi-time frames are also showing that we're in a strong trend as well, since price has to be either all above or all below the moving average line. So, and along with that, just the fact that our strategy gets violated after we break past the red SMA, that's a really good point for us to make sure that we're trading in strength. Okay, now you guys might ask, what do you do when price breaks past the red SMA? When do you start looking for a trade again? When it breaks down immediately? Not quite. See, you guys might see that we broke down right here past the green SMA again, and then we pulled back and we tapped back into the SMAs right back over here. But we wouldn't want to enter off this, okay? Even though, we could have entered off of it since it followed the rules. We wicked into there and we candle closed bearish. We can enter off that. True, but that's not as A plus as waiting for the full swing low to be broken to confirm that we're not retracing it more, right? Because in our downtrend, this is the lowest point we made. This is the lowest low we have so far, okay, in our downtrend. And in this current entire area from this point going up, this is our retracement, okay? Whoops. This is our retracement. All right, if price decides to break past the red SMA, we want to wait for price to come back and break past this full low to ensure that we want to continue our downtrend. Sometimes you might see price doing this, but then doesn't come all the way down to the swing low and just reverses like this and starts forming this uptrend. And we don't want to get caught up in that. We don't want to get caught up in any sort of fake signal, so we're going to wait for price to fully break this low right here. And once the price breaks this low, that's exactly when we'll wait for another pullback trade. So price ended up breaking past this low. Now, this is outside of my trading window. I trade personally from 9:30 a.m. to 12 p.m. Eastern time. That's when I've tested this strategy in and have found amazing results. So sometimes, for example, this trade right here, we did get a opportunity right here, a very small opportunity that ended up losing off this setup with a 2.14 RR that got stopped out for 1 R. But this is outside of my trading window, and the reason why I restrict it to only the first few hours of New York session market open is because that's when we see the most amount of volatility, and I want to make sure I'm not trading in the market that has a lot of noise and a lot of weird price action, and we usually have that around 12 to 2 p.m. Eastern time. I'm in Pacific time, so that might be why you guys see like 9 o'clock on the bottom. I'm in Pacific time. But in Eastern time, 12 to 2 o'clock is around lunch hour, which is when we see a drop in volatility. And I don't want to get caught up in trading in noise, which is why the strategy performs effectively, the most effectively from what I've seen in the first few hours of market open. Okay, so we had a beautiful trade that made us 5R. So even after 2 losses, we are still going to be up pretty good with around 3 RR, since that first trade gave us 5 over 5 RR. So you might have some home runners, you might have some streaks of losers, but you guys have to understand, trade a strategy for a long enough amount of time before deciding to stop or changing the strategy, because you want to get a set amount of data on the strategy before you determine it unprofitable or unsuccessful for you. Okay, even if you're trading my strategy, even though it has shown success, doesn't mean that it's going to work out for you. Maybe you guys are not able to identify the trends properly, or spot the entries properly, or manage the trade properly. Maybe some trades might be too big of an RR for you guys, or maybe you guys prefer trading something with a huge RR, or trades that last longer. And maybe you don't like getting in and out very quick, because that causes a lot of frustration and overthinking, and you don't have the focus for that, right? Maybe you do, maybe you don't, but that's totally up to you, whatever you guys' preference is. So I would highly recommend give the strategy a shot and try it out for yourselves. It's very simple. It's about like 90% mechanical, or 80% mechanical and 20% discretionary. You have all the rules set in place to determine a strong trend, right? Wrapping it up again, we want to see a 200 SMA. We want to see price above or below the 200 SMA first to determine our bias. For example, in this case, it's below the 200 SMA. That's going to identify bearish for our initial understanding. Next, we want to see what is the trend of the price action. We see that we're in a downtrend on all the time frames. Beautiful. We're making lower lows and lower highs, right? And then we also want to see, is the SMA sloping in the direction that we want to play in? The more timeframes that also have this confirmation aligning, the higher quality the trade is. The less confirmations that we have, the less quality it's going to be. Okay. And you guys can base your kind of positions off of that as well, if you would find dynamic position sizing better for you. But if you guys are just recently getting into trading, maybe have a few months to a year of experience, I would recommend holding off that until you gain the experience using this strategy. All right. And the final thing, after you've identified your bias, you want to wait for price to have a strong move in the direction of the trend, and then a pullback, pulling in between the green and red SMA without tapping the red SMA at all, meaning wicking it or closing it. And then you want to see a candle closing in the direction of the original trend, and the color of that candle has to match the direction of our bias. So a bearish candle for a bearish trade, and a bullish candle for a bullish trade. Okay, so very stupid simple strategy. Give the strategy a shot out. Let me know how it goes. Keep me posted in the Discord if you guys are going to try the strategy on your own on different markets as well, on different time frames. I'm curious how you guys are doing with that strategy. But if you guys are not already in the Discord, join up in there. We're live in there every single morning trading with the team. So I'll see you guys in the Discord. If you guys have any questions about the strategy, let me know in the comments or the Discord, and I'll get to it as soon as I can. All right, gal. Peace out, everybody. Take care.